Welcome back. You're watching us here on Markets Today. We're talking about all the things that move the markets today. We spoke about the markets itself, the RBI direction of withdrawing 2,000 rupees in terms of circulation, the notes, and the JSW steel stock. Let's talk about the fourth headline today. Then Siemens India, that tumbled almost 10% after the company approved the sale of its low voltage motors and geared businesses for about 2,200 crore rupees to its parent. And this is the second time they've hived off a business and sold it to the parents, and as a result of which brokerages are worried about the corporate governance issues itself. What are those issues and what are the brokerages making of this? Vivek joins in with the details. Vivek.
Well, a very sharp reaction came in as far as Siemens India was concerned. Remember, in the dying minutes of trade on Friday, the company informed the exchanges that it is going to go ahead and sell its low voltage and geared motors business to its parent entity, that is Siemens AG. Now, this particular sale consideration was pegged at close to 2,200 crore, which implied a valuation of 2 times FY22 sales for this particular operating entity. Now, what was the rationale for this particular deal? Siemens AG globally has gone ahead and consolidated all of the low voltage businesses that it operates across different geographies, and it plans to put it under one single operating arm. Now, after that, what they intend to do is that they intend to either go ahead with an IPO or bring in a long-term strategic partner for this particular business. Also, remember, the deal will now require minority shareholders to go ahead and approve. Company also has said that post receiving the consideration for this particular deal, there will be a special dividend that will be distributed as far as the shareholders are concerned. So what explains the stock price movement? Now, number one, it is a related party transaction. Number two, the valuation at which the deal has been done at is something that analysts are not happy. Now, when you're talking about Nomura has immediately said, number one, they have downgraded their rating on the stock to reduce from neutral. What they're saying is that concerns have arisen on the fairness of the valuation of the business being sold to the parent. Haitong has said businesses carved out from the company always is a concern amongst investors. UBS has said that the low valuation implied for the motors business, given the fact that there were very good growth, profitability, as well as cash generating opportunity for this particular business. In fact, a fair valuation that was being done by UBS themselves implies that this particular deal could have been done at 6,000 crore versus the 2,000 crore that Siemens has actually given itself. Now, lastly, Nuvama says that this particular deal puts the minority shareholders at a disadvantage. But taking into account all of these factors, the stock definitely has seen quite a bit of a sharp correction from its recent top.
Sharp correction indeed, Vivek. Thanks a lot for those updates.